This is Farm Progress Company's DatelineDrought.com, presented by Genuity Drought Guard Hybrids. Hello, everyone. As I join you this Tuesday evening, having just returned from the Plain States, water is on my mind. In Kansas, several of the growers were talking with me about their concerns over having enough water and the inability to have enough water to irrigate. I'll talk more about that in just a moment. But we share with you the comments from the state climatologist in Nebraska, Al Dutcher, who says the current forecast indicate his state won't see any significant increase in precipitation this winter to turn around the drought during the winter time. He says it'll probably be a more normal winter, and generally speaking, this period December through February is typically a dry period for Nebraska. Al Dutcher said there would have to be a record snow season to turn around the drought this winter, and even then, as he put it, even then, I don't know if it would be enough. The critical period to determine if the state will have another significant drought year, Al Dutcher says, will be the spring, from March in through May. Al says it's going to take an exceptionally wet pattern, April and May, to have what he called a decent shot at reducing the drought. Now to Kansas. A well driller there along the Kansas-Missouri state line contacted me and said he'll be drilling his first well in the next couple of weeks under a state cost-sharing program in Kansas. This well driller said it's similar to a program that they've gotten started this year in Missouri, whereby the cost is being shared in part by the state to access new water supplies on farms and ranches. He said that drilling would be taking place early in December. I was in Pawnee County, Kansas yesterday, visiting with growers and agribusinessmen there, and yes, water is on their minds. One producer told me that he sees less corn being planted in that area, that he believes there just won't be enough water for that corn, and there will be more grain sorghum, more milo going in because of that, since it tends to be a more drought-hardy crop. I asked a businessman there if they're seeing any increase in well drilling in that region around Larned, Kansas. He said not to his knowledge anyway. He says they're seeing consolidation, but growers are pulling together the water from maybe 2 or 3 wells to try to get the water they need. He also offered the opinion to me that there will probably have to be, in his mind, across-the-board cuts in water usage to make sure everybody has enough, and as he put it, that probably won't be very popular. We hope you'll drop in here often. Continue to be with us at DatelineDrought.com for the latest. DatelineDrought.com, presented by Genuity Drought Guard Hybrids. We hope you have a great week.
Every day in these Dateline Drought market updates, I include price charts for corn, soybeans, and wheat. This gives you something to look at besides my talking head, but it's also because these charts are followed closely by traders who oftentimes base their decisions to buy or sell on what's happening to these so-called technical indicators. For these traders, price charts not only show where futures have been, but maybe where they're going too. This also helps explain some of the erratic trading the markets have seen lately. Soybeans are a prime example. January futures looked like they were finally ready to break higher yesterday after moving above their trend line drawn off fall highs. That's the red line on this chart. But the contract was unable to move through its 200-day moving average, the black line, which is a key indicator of long-term trends followed by chart traders from stocks to soybeans. Futures rallied up to that line again overnight before pulling back again during today's session, when prices fell, testing the old resistance line as well as the 2-week channel off mid-November lows. That's the blue line on the chart. Futures finally held at that point, with January reversing higher to post modest gains, ending up 1 3/4 on the day to 1455.5. March corn has also been in an uptrend since mid-November lows were confirmed, and moving averages were also in play for that contract. The market is traded between its 100-day moving average, the red line above the market, and support at its 50-day average, the black line below the market. Corn tested both its uptrending channel and the moving average today before firming a little. March ended the session down 2 3/4 at 7.52. These chart signals have proven bearish for wheat despite some positive fundamental news on dry weather on the plains and the sale of U.S. wheat to Egypt over the weekend. Chicago March couldn't hold its support line off November lows, the blue line, and failed in a bid to retake its 50-day moving average, the red line. It finished down 4 1/4 at 8.56.5. Kansas City March, meanwhile, couldn't hold the move above its 50 and 100-day moving averages, testing its support line on Tuesday as well. KC settled down 4 1/4 at 9.02.5. In Minneapolis, the March contract tested its support line Monday, then closed below it today, though it did finish well off its lows, ending down only 3 at 9.29 1/4. Keep up with the drought situation across the country by visiting www.datelinedrought.com.